In this tutorial, I'm going to show you how to combine different indicators for market analysis in order to place trades professionally. So first of all, the first thing to do is to do what we call trend analysis. All right. So please follow the cursor as I demonstrate how best to use this combination of indicators. But the first thing to do is to analyze the trend. The trends are in two main parts: the upward trend and the downward trend. And sometimes you also have to consider or take into consideration the consolidation trend, or trends that are consolidating. If the market is flat, or if the trend is actually trading in a range. All right. So let's look at this using GBP USD here in this tutorial. So there are two main things that we have to look at. The first thing is the previous trend. So the previous trend of the GBP USD on this entire chart, and I'm doing this analysis on 4 hours. 4 hours is best to use in terms of trend analysis because it's in between the longer time frames and the shorter time frames. It's in between all these shorter time frames and the longer time frames. So it's able to give us a good presentation as to where the trend is actually going. So if we look at it here, we will find out that the trend is actually moving upward until here, and then it got rejected here, and then it started to move downward. All right, so if we are looking at trend analysis, it's important that we bring in support and resistance levels. It's important that we bring support and resistance levels. So let's look at it. We can say from here that the trend was rejected from upward movement to a downward movement from here. So this is a resistance. This is a resistance. Let me just take it from here. It moved from here. It formed a resistance, which means the price was rejected. So it came and halt here, and then it formed a support here. Then it went up, and then it got rejected here again, and then it formed this resistance. Mind you, this is a support, and then this is a resistance. This is also a resistance. So it now moves down, and then it breaks this support here. You can see it breaks this support, and then it went down. So if we look at this trend now, just by even using the analysis of the support, immediately it breaks this support. The buy trend is cancelled, and then a sell trend had started. So that is, so it start to move down, and that is what we are seeing. So if we want to base our analysis on this GBP USD price right now, we will say that the trend is moving downward. The trend is moving downward, but we cannot just play straight on the trend because it's moving downward. I will first use the downward analysis, and then later we'll look at another pair to look at the upward trend. Now, for us to make a trade or to place a trade, we have to check everything. It's important. So the first thing, as I said, is to check the trend. And now we can see that the GBP USD trend, or the price, is actually moving down. The prices don't just move in a move down or up in a straight form. They move down, go up a little or more, and then they come, just as you can see. But if you look at it downward this way, you'll find out that it is moving down, or the price is falling gradually. The next thing to do is to check whether the price is overbought or oversold. And in this situation for GBP USD, we'll be looking at oversold, whether the price is oversold. So let's put the stochastic oscillator. That is our first indicator that we are going to analyze. So always use the default. Okay, so this is the stochastic. This is the stochastic, ranging from 0 to 20, 20 to 80, and then 80 to 100. When stochastic moves below 20, then it indicates oversold. When it moves above 80, then it indicates overbought. In this scenario, let's check the value. There are two lines. The broken red is the signal, and then the blue, or the main moving average, is the value line. If we look at them carefully, the value is 33. It's best to catch it at the tip. It's best to catch it at the tip. Okay, let's just look at it this way. Okay, and then the signal is 32. Now, looking at it around here alone, you will see that it hasn't gone below the 20. So the price is not yet oversold and it's not yet overbought. But in this particular instance, we are interested in whether the price is oversold, because the trend is moving downward. Now, since it's not oversold, it means that there's more sell coming. If we look at it carefully, it's still coming down. So here we will say that the stochastic is not oversold. That is the basic thing that we want it to tell us, whether the price is oversold or not, and the price is not yet oversold. Let's now go and take relative strength index. We use still the default. All right, if we look at RSI, or or relative strength index, if we look at relative strength index, you will find out that it's in a sell zone because it's below 50. When RSI is below 50, it shows a sell momentum, and we can see the value here. Always just put your cursor at the tip of the relative strength index, and then you will see the value there. So the RSI, it's also showing that GBP USD is going to go down, or it's still in the declining state. All right, let's also go and look at MACD. I will advise that you take MACD from custom so that you can see the signal. So this is the signal I'm talking about. All right, so if you look at MACD from here, you'll find out that it's going down. It's moving downward. You can see this red line, which is the signal line, is going down, and then you can also see the bars of the MACD falling. Though it's still the last, this one is still above the zero zone. You can see that it's diminishing and it's going down, and just by look and by definition of how it works, we can say that it's also moving down. So we have three indicators indicating a downtrend for the GBP USD. All right, so let's take them out and look at other ones. So now let's also look at parabolic. Let's also look at the parabolic SAR. Let's look at the parabolic SAR. Okay, use the default. Okay, I want to use the style, the color red. All right, so here we are. If we look at the parabolic SAR, the dots are above the trend, showing that there is a sell momentum. There is more strength in the sell. And many times when you see the dots in this way, forming in this way, you'll find out that this dot is coming just after this. It means that there is more sell strength. It means that there is more sell strength. So it will be selling more. All right, so we looking at this sell trend, so we're not actually bothered now about these previous buys. We have already analyzed them, just the trend, and found out that the GBP USD, it's moving downwards, and the stochastic, RSI, MACD are all showing that GBP USD is a down trend now. The price is going down, and the parabolic SAR is also saying the same thing, as we can see. But let's look at it. Let's look at the parabolic SAR in 1 hour. If we look at the parabolic also in 1 hour, it's clear that it's also in the state of a sell. But we cannot just place a trade, because all these indicators are indicating that the GBP USD is moving down. it's important that we confirm with our leading indicators. The parabolic SAR can be used alone, but in this situation we looking at how to use a combination of indicators to make a decision. So let's look at the moving averages. Let's look at moving average, exponential moving average 12. So the period is 12, exponential, and then let's choose a color. Let me take yellow, increase the font, and here we go. Then let's insert the 5, the EMA 5, that is the exponential moving average 5, the exponential moving average 5. So let's change the style to say blue, or let's use this deep pink. Alright, so if we look at the EMA 12, the EMA 12 simply stands for exponential moving average 12, and then the EMA 5 stands for exponential moving average 5, exponential moving average 5. So the way they work, it's simple. When the EMA 5 crosses below the EMA 12, then there is a confirmation that the sell is going to go for a while. That is a signal that GBP USD or any other pair or instrument that you are trading, once the exponential moving average 5 crosses below the exponential moving average 12, it's an indication that a sell trend has confirmed, and then you can place your trade. But then in the previous videos on parabolic SAR and EMA 5 and 12, I explained that you enter the trade when these two conditions are met. 1, the parabolic dot should be kicked so that it is above the trend. Secondly, the moving average 5 should cross below the moving average 12. When these two conditions are met, then you can confidently place your trade, and then place your stop loss above the first dot of the parabolic SAR. So let's try that, but before then we are still analyzing. So here we have a confirmation to place a trade for a sell on this GBP USD, but we are not done yet. We have to do the final check, and that is by using Bollinger Bands. So we use the default. Let's use blue. Let's put it blue. Let's increase the font a bit. Okay, so here we are. Bollinger Bands are best analyzed in 4 hours, but let's also look at it in 1 hour before we move on to the 4 hours. Here you'll find out that this is the lower band, this is the middle band, and this is the upper band. So now if you look at it, the price, this is the price, this is the current price that we are using to do the analysis, is the one coming this way. Here it is. If you look at it, it's in between the middle band and then the lower band, and even the other indicators. If you look at the EMA 12 and the EMA 5 are all inside the middle and the lower band. So this shows that it is selling the GBP USD by analyzing with the Bollinger Bands. It shows that it is a sell trend. But then let's do the final check on 4 hours. If we come to 4 hours, we'll see the same thing, that the price is ranging inside the middle band and the lower band of the Bollinger Bands. So this is the upper, the middle, and then the lower. You can see clearly here that when it was buying, the trend and all those were inside the band here. That is the upper and then the middle, and then it went till now. So basically, if you understand how Bollinger Bands works in the previous videos, you'll find out that immediately the price crosses the middle band and it sustains itself within the lower and the middle band, then it confirms a sell trend. And as you can see, when this happened, it has been selling from here. It confirmed here. It has been selling till now. And you'll find out that if you look at it clearly, you'll find out that when the EMA 5 crosses the 12 here, it was around that same time that the Bollinger Band also confirmed itself. So it's important to make sure that all these indicators are showing that the trend is moving towards a particular direction. And as we're looking at now, we are looking at GBP USD, and it is moving downwards. That is a sell trend. So now if you look at it, if you look at the Bollinger Band, it's clear. It's clear because you can see the lower band here, and then you can see the middle band, and you can see that the trend is within the lower band and then the middle band. So here we have a sell trend. When you are done with this analysis, then you now know that the trend is a sell trend. So you can go to place your trade. But then come another decision that you have to make after analyzing this trend to know that this is a sell trend. Yes, this is actually a sell trend. All the indicators are showing that it is a sell trend. Now, let's come here to the volume or the lot size or our investment amount to invest on. It's always important to make sure that how much you are investing is aligned with how much you have or with your equity, because this is a marginal product, so that you don't over trade the account or you don't over leverage the account. So it's important to know how much to invest at a time. So it's important that you read the 2 books that are attached to these videos. You'll find how much lot size to place. You can check them out in the simplest method to make money trading forex market. It's in that book. Alright, so here I'm going to take 2, and 2 is $20. So to find out how much, or to find out in figure how much these units are, you just multiply by 20 and then you will know. Okay, so this is what? $20, 2 lot size. The third thing to look at, or the final thing to look at before placing your trade, is the difference between the sell by market and the buy by market. Yes, this is a sell trend, so you are going to place a sell, but it's important that you beat the market price. So you don't have to worry about all these digits. Just forget the last digit here and pay attention to the last 2 here and the last 2 here. Always make sure that this last 2, the difference is below 4 before you place your trade, before you pull the trigger. So if you see here 10, 12, you can just look at it and say, here we have what? 3 difference now, I want 2, so I will wait. Okay, we have 2, and there we go. I have placed my sell trade on GBP USD. Once I have done all these things, or you have done all these things, you are trading professionally. There is 1 or 2 more things left. After you've placed the trade, you have to place your stop loss. Placing the stop loss, since here we entered a bit late, let's go to 1 hour. Remember, we are supposed to use the EMA 512 parabolic as our leading indicator, as our leading indicators. So we can come here to place our stop loss right above the first parabolic dot. So let's pick, so this horizontal line will help us to locate the actual price here. So that is 1.29492. Okay, so let's double click on this and let's get it out. So here we have placed our stop loss. We have placed our stop loss. This stop loss is our insurance. Is the risk we are ready to take on this investment. Why is the stop loss placed here? It's because the parabolic SAR here is representing a resistance. It's the same as a resistance. So in case the price turns, which can be by any economic news or any economic report, or by sentimental traders, or when the market is tested, the trend can turn. And there's no guarantee in the market. So you have to make sure that you always have your stop loss so that you can continue trading tomorrow. Remember, trading is business. Alright, so that is why you place your stop loss just a little bit above or right on the first dot. Let's go back to 4 hours. So if we come to 4 hours here, we can equally place take profit. We can equally place take profit. To place take profit here, let's locate the next support. There's no clear support here, but I want to assume here. I want to assume that this is a support. So my take profit will be there, 1.28301. All right, so this is my take profit. All right, so the question is, when do I take my profit? It depends on the type of trader that you are. If you are a scalper, then it means that you'll be taking advantage of the profits that will be coming. You take the profit in bit and then you replace. But if you are a day trader, then you are going to set your stop losses and then your take profits and leave them to run. But I will advise that between 5 to 6 hours you check your trades. You check your trades. If you are a part-time trader or if you are a day trader, then between 10 to 12 hours check your trades. Alright, so now we have finished doing the analysis, and then we have been able to place a trade on GBP USD with our stop losses and take profits. So our job is done. Our job is done. You will find out that if you use multiple indicators, as I have just shown you, you will be at the best always. You will be trading professionally. All right, so this is how we analyze a downtrend with all the indicators. So this is how you combine indicators in doing your analysis before making a decision of placing trade. So let's look for a trend that is going up, a trend that is moving upward, and let's do the analysis to see how it looks like. But it's the same thing, it's just the opposite of it. Right, good. This trend, it's a buying trend. I have this selling. So let's use USD JPY. So looking at the USD JPY, it's clear that if we look at it from the bottom extreme left here on the chart here, just follow the cursor, you will find out that it is a real buying trend. Okay, so you'll find out that the resistance, look at this resistance and look at this resistance. All the resistances, the present ones are all higher than the previous ones. This one is lower than this, and this is higher than this. This resistance is higher than this. This resistance is higher than this. This resistance is higher than this. So you'll find out that the trend is actually an uptrend. And then also the supports are also being lower. So you find out that this support is actually higher than what? The previous one. And this support is also what? Higher than what? This one. And this support is almost in line because the price really reversed more before going up. And then this support is higher than all of this. So it's easy actually to find out that to see that if you look at this, and then if you look at this, I just want to show you something. Just want to show you something here. Okay, so let's look at here. Look at all these resistances. They are all above the previous resistances. And then if you look at the support, they are also moving in that way. This support is higher than all of them. So it's easy to identify that this is a buying trend. It's a buying trend. But does that mean that we should place a trade? No. No. We still have to check all the other indicators to be at least 60 to 80% sure where the trend is going. And this is actually a technical analysis. So let's see whether the USD JPY is overbought. As I said earlier on, if we are looking at a downtrend, then we'll be looking at the price whether it's oversold. But if we are looking at a buying trend, they will be looking at it whether it's overbought. And that is the basic use of stochastic. So let's take stochastic. We use the default. Here we go. Now, if we look at stochastic in 4 hours, it's not yet overbought. It's still below 80. That is the signal. Look, the signal is still below 80. It's 75. It's overbought when it goes up. And then the value and the signal are all above the 80%. So here simply the stochastic shows that the price of USD JPY is not yet overbought, and we're doing this analysis in 4 hours time frame. Now let's look at relative strength index. All right, so we have it here. Now if we look at the relative strength index, it's also not yet 70. It's also not yet 70. It's 69 thereabout. So simply it's also not yet fully overbought. It's approaching. But looking at it, you'll find out that USD JPY is not yet overbought. All right, let's insert the MACD. Like I said, always use MACD from the custom so that the signal can show, the signal line can show. So here you can see that the bars are actually, they've moved down, now they're moving up. The bars are actually above the zero zone. They are above the zero zone. So it's clear that the USD JPY is on a buy trend. It's an upward trend. It's an upward trend. Okay, so it's important that you analyze all these indicators before placing the trade. So let's go and then now put our parabolic SAR. So here we have our parabolic. If we look at the parabolic, the dots are below the trend, showing that it's still having the buy or the buying strength. still showing a buy strength, an upward strength. So you can see here. Okay, but we need the other two moving averages to confirm. So we come and take, this is moving average, exponential moving average 5, and then let's put the 12. Let's change the style, the color. Let me take yellow, and here we are. Now looking at it, they crossed here. The 5 crossed the 12 here, and if you look at them, they are still open. The more they open up, the more the strength of the trend. You can see they were a bit close here, but here they are wilding up. There is a gap. The gap is widening more, so it shows that this is a real what? Buy or buying trend. All right, let's do our final analysis before we place our buy trend. But then, as at now, everything it has shown that USD JPY is buying. So let's put in our Bollinger Band default. Here we go. If you look at the Bollinger Band, this is the lower band, this is the middle, and this is the upper band, and we are analyzing it in 4 hours, remember. So if you look at it, the price is right within what? The upper band and then the lower band, showing that it is still buying. It is still buying. If we even look at the candlestick, it's the same thing. It's the same thing. It is going up, and it's easy to identify this trend, because mostly you find out that the trend, the other indicators, especially EMA 5 and 12, will be inside the bands. So this is an uptrend, so the price and the EMA 512 are within the middle band and then the upper band. Once this analysis is done, you are sure of what you are doing. It means you are trading professionally. So now you can place your trade. Here also, when you come to the new order to place trades, you have to analyze. You have to make a decision, and the decision should be based on how much capital, that is how much balance, especially your equity. You should look at your equity. It's important to look at what? Your equity before placing the trade. So here I want to use 3, that is $30, 3 units, which is $30. If you want to know the figure, you just multiply by 10 and then you will know. So it's 30. So after making the decision as to how much to invest, the next thing to do is to also beat the market price. And how to do that is by looking at the sell by market price and the buy by market price. And I said that always make sure that the difference between these last two digits is below 4. If you can see now, it's 2 because this is 1, 4. I love to place trades when the difference is 3 or 2, like we can have here 2. So here we go. I have placed a buy trade, 3 lot size on USD JPY. So the next thing for me to do is to place the stop loss. So the stop loss, I will go to 1 hour. I'll go to 1 hour. So I'll place the stop loss right below the first dot here. So let me take the horizontal line and place it so that I can see the price here. So that is 112.812. Okay, so here we go. I've placed my stop loss here. That is my security, my assurance, my insurance. My insurance against this trade. Okay, so if anything happens, should the trend turn against, when it comes here, it will close it for me. All right, let's go back. So now I want to place a take profit, but it's too close here, so I cannot. So I have to go for a higher time frame to have more space. Okay, so here place my take profit just a little bit below the last resistance, because that is where market will really struggle to break or to move up further. All right, so that is 114.187. So once you place, just double click close to the horizontal line, and then you can move it and delete it. All right, so I've placed my take profit and my stop loss. There is nothing more for me to do. What I have to do, I have done that. So the rest is on the market. You cannot move the market. The market will do what it has to do. But what you have to do is to analyze the market properly before placing trades. Do not place many trades because you have analyzed and all of them are moving into a particular direction that shows that you're going to make money. No. Maintain maximum 3 trades, 2, maximum 3. If you want to place more trades, pick the profit and replace, or lock the profit and then you replace a new one. And always maintain same lot sizes. Don't be carried away by what the market can give, but always be conscious. So imagine if we had started somewhere here, immediately the dot kicked and then the EMA 5 crossed the 12 and then we entered. We would have been in profit all this while. We would have been in profit all this while. That would have been a lot of money. A lot of money. So people ask, how long should I leave my trade? As you can see, this is in the daily time frame, and each of these dots represents 1 day. So if we should count now, you'll find out that it's been there for days. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. But you find out that we might probably enter somewhere here. 1, 2, 3, 4, 5. So it's important to be very patient. If you want to make good money in Forex, patience is a virtue. If you look at when it was selling here, it sold for days before it turned. Market is always up and down, up and down. All you have to do is to follow this system and you are going to make money. Many of them, many trends, if you just, after setting your indicators, you just move a pair and you will see. If you look at this, it's a downturn. So when you practice these indicators, how to combine them, how to use them, you can use them individually and master them individually, and then you now combine them and the result will be amazing. If you just look at this, you will see that it's trying to start a sell now. So let's look at it here. Just look at this. This is a sell trend, right? You don't need to worry. If you look at this, you will see that all the trends are inside the Bollinger Band, and then the trend is also in, all moving down. It's easy to actually identify where the price is going, because I'm experienced. When I see this, I know that is going down. All I need to do is to make decision as to how much I want to invest, and then I check here. Here you can see 89, 91, 2. So I go with it, right? So I've placed what? Another trade. I have 3 trades now. I'm no more what? Going. I come to 1 hour, and then I set my stop loss right behind the first dot. That is 0.76324. I move to a higher time frame where I can see clearly, and then say somewhere here I place my take profit 0.75490, and then I delay the horizontal line. So it's easy to trade when you follow these simple tools to the core. Follow them to the core, master them over time, and you will enjoy this industry and you will make a lot of money and transform your financial status or upgrade your financial status over time. Trading is not a quick fix to riches. It's a gradual journey. You can make a lot of money overnight, yes, but always make sure you play safe so that when the worst comes, you are secured. I pray that you will follow this simple things, and then you will make it big time. You don't need to understand everything in Forex before you make money. You just have to understand these basic things that I am showing you. And once you are disciplined and patient, it doesn't matter how small your money is, just know what lot size to use, and then you are going to make it big time. God bless you. Thank you for making time to learn this video and being part of this awesome industry, Forex market. Enjoy your trading and enjoy your money. Thank you.